do you want to buy the dip?
Not yet. We don't think this dip is finished. We think we're going to see the S&P fall at least 5% from its summer highs during probably September and October. And I think what you saw yesterday was kind of a get back to work, get back to school, make your decisions, and just there isn't a whole lot of upside from here. And I think the market needs to be a little bit lower to entice more investors to come in. So not quite yet.
Well, but not quite yet, but you will buy the dip at some point.
We've been saying since the middle of June that we were likely going to see a 5% plus dip and that we would likely buy it. Where we think it's worth just staying the course and staying fully invested is in growth stocks, technology, and healthcare. But I think we're going to get a dip, and I think the part that's most vulnerable, and it's playing out as we expected, is what I call cyclical value stocks, financials and energy. Big disappointment in the oil price recovery, especially up against the dollar's softness. And now we have all these doubts about will the Fed hike in December, and you see the 10-year yield at nearly 2%.
So I wanted to pick up on what you said that people just got back to work. So take a look at the Bloomberg here. This is going to measure volume, as we've seen. This white line is what you want to pay attention to now. It's the current moving average for the 20-day for volume. The green is the high, the blue is the average, the red is the low. So obviously we're right around the low. So was that really it? So yesterday, you all of a sudden people coming back to work and say, oh, I'm going to sell some news that happened last week. Is that truly what you're attributing it to?
Yeah, I believe all summer that people, think about how do they want to be positioned into year end, and they begin to make these decisions as they get back to work. I don't think everybody did all their trading and positioning yesterday, but I think that will continue to play out over the next couple of months as people focus on what are all the known risks, from debt ceiling to what's going to happen with the geopolitical concerns. But I think most importantly, and it's kind of a risk that we can kind of get our arms around, it's a risk that we can't ignore, because it's just really within the case of affecting earnings, which is what's going to happen to interest rates. That matters so much to what's going to happen to bank earnings. And I think that's going to be something that puts pressure on those stocks. And I don't know why energy stocks are still trading at the valuations they're trading at. There's no sight of $60 oil, and most of those companies are still priced for that.